Hey, Courtney Smith here with our weekly video newsletter, TradeSmith. Some pretty interesting things happening. Let's get right into it. Of course, this is the most interesting thing of the whole presentation today. So once we finish this disclaimer, it's all downhill. What can I say? But we still can think about the S&P 500. Look, strong price action. We had our dip last week, but we closed strong with a reversal bar on Thursday and good follow through on Friday. I'm recording this actually Monday morning, and we're seeing some follow through today. Now, we've gotten up to the old lows at around 2025, and this is where we should expect to see the market cap out. It should sort of run out of gas right here, but it looks like we might go a little bit higher, but still got to be thinking that this market is going to have a little bit of a setback here, kind of go into kind of a trading range. I don't want to be super aggressive. Let's carry on and see some of the reasons why. Dow Jones, same story. NASDAQ, weaker than the other two indices. It's not up to those old lows at 109 and small change yet. Seasonality, our seasonality indicator is bullish. And remember, it turned that way just a couple of weeks ago after having spent the early part of the normal seasonal period, which is October to end of April. You can see that the market was either sideways or down, but now we're finally getting some bullish seasonal signals. So this is a plus for the market. Nonetheless, and until this thing breaks lows, I'm going to be considering this to be bullish. And what that means is I'm going to be putting on bigger than normal positions during this period of time because we've got that extra oomph to the upside. We looked at this last week. We looked at this last week. But, basically it's all saying it's bullish. Oh, I'm sorry. We didn't look at this. This shows, you see, the interesting thing is that the seasonality of utility stocks is the complete opposite for the Dow Jones. So one of the areas we should be focusing on is utility stocks because we're coming up to the period in April when the seasonality in the stock market normally peters out, but that's exactly when the utilities tend to turn bullish. So not right now, but pretty soon we want to be looking again to get into the utility sector. Yield curve is turned positive. This is good news a year from now because this is a leading indicator of the market a year in advance. Go watch our webinar on this subject, but this is turning positive. So that's a good thing for the market. Asset allocation. They're taking money out of bonds, putting it into the stock market, and all that new cash is helping to drive the stock market higher. So this is bullish also. Risk appetite. They want to take more risk. They're moving into riskier types of stocks and away from boring stocks. They're moving away from stocks that are just going nowhere to, I shouldn't say going nowhere. They're stocks that are like food and drugs that just kind of not as exciting, but they're safe. And they're going back into more aggressive stocks. That's bullish for the stock market as well. Now, global shares finally broke out in the last week. Now, remember, I focused on these a lot last week because I feel as though there's some great opportunities there. In fact, we might have almost missed some of them. But let's take a look at some of the sectors that I highlighted last week as being really bullish. How about that? Australian shares have just completely taken off. Oh my God, this is fantastic. Unfortunately, I'm not long. I told you to get long, but I didn't get long. Japanese shares, another area that you should be focusing on because they're starting to break out. Another great one here is Spain. Look at how it broke out on Thursday. This is a great sector that you should be involved in right now. French shares also broke out. Now look at Thursday's price action. It opened up strong, closed weak, and then exploded on Friday. The ECB made a bunch of announcements on Thursday. At first, the market didn't like them. And then on Friday, they said, you know what? Actually, that was pretty good news. And they took off to the upside. Greek shares. Now, this is the one that I've been highlighting on. Now, I really want to get long. We've broken out 2 times here in the Greek shares. And I know everybody says it's the end of the world, but they're up 30% since the February lows. And I think we're going to see this go back up to those highs at near $11. That would be about a 60% gain. So I'm getting very, very bullish on Greek shares. Bonds. We've been highlighting the bearish case. I'll show it to you again in a minute. but it looks like we're starting technically to run out of gas on the downside. The formation we see there is called a descending wedge, and that's actually a bullish formation. Prices are still going lower. Why? Because our key factors are all pointing higher and all pointing for higher interest rates. Higher interest rates means lower prices. And so generally speaking, I still want to be on the short side of bonds, not on the long side. But I don't want to be aggressive because this formation suggests that we don't have too much downside at this point. So probably best to stand aside from the bond market at this point. But if you're going to do anything, be short. Dollar, struggling. Really, underlying fundamentals are fabulous, but the price action is not. Gold, on the other hand, continues to move higher, not exploding higher. We're kind of through that phase, but still it's a nice but sluggish bull market in gold, and I'm bullish on gold. I'm long gold. I love the gold market right now. Why? Well, look at this. We now have 2 out of our 3 indicators are bullish for gold. That's the best reading we've had in weeks. Only one indicator, which is the yen, is telling us to stand aside and to just be neutral. But 2 out of 3, we should continue to see that sluggish bull market. Oil, I think oil has ended, it's made its bottom. We should be in a bull market for a while. We're not going to get above $50 in my opinion, but we're going to get this kind of bounce from the lows. Then we're going to start to see some more bearish fundamentals come out, and we'll start to see the oil market go down again. But I think that $26 low is going to hold. I don't think we're going to go below that $26 level, at least not for many, many months. Once we get back up into the 40s again, I'm going to go and take a look at the fundamentals to see if anything has changed. All right, pretty interesting week. Obviously, we'd love for you to come and see our specific trade recommendations in the stock and options market, and also additional insights into where this market is going. Just go to that website up at the top of the page, sign in. Love to have you as one of our fully paid up members. All right, and by the way, fully paid up members, hang on just a second, and we'll come back with some more pretty interesting stuff. I got one new trade for you this week.